Testing.
Check. Didn't notice the facial hair there, Arturo. Looking good, man.
Thanks.
Get
Gotta get that cut for
that cut.
Yeah, I got a couple things going on next week. It's gonna be very interesting. I'm speaking in Nashville for that thing, and then the next day I gotta speak in Memphis. So I'm like,
Memphis.
Yeah, it's a symmetry thing with Octavia and John Clayton.
Okay.
Cody's the keynote for that, and so I'm speaking before Cody. So I'm going down there for that. So that got facilitated during the mastermind. So.
Oh, nice. And Octavia's gonna be there.
Yeah.
Nice.
So I get to speak in front of those folks, and get to talk about daily success and stuff like that, and a couple things that these guys need to do in order to get to the next level. So that'll be a good talk.
Yeah, for sure.
Cody's like, man, you got all the FFL people. I got to start helping out some more of the symmetry folks. I'm like, well, I'm gonna be there, buddy. So we'll see.
Yeah.
So see here. Looks like we ready to rock. Lee Andrew Valley. Dr. Pritchard, what's up, brother? Got a fresh cut?
Not that fresh. not that fresh. This is 10 days on the road.
10 days.
Just got back.
I do whatever Zoom filter you got then for this call. I got with Coach Bird in just a second for sure. But got people ready to rock and hop in. The little channels is popping, so I'm gonna go ahead and start letting folks here in just a second. Just want to confirm we were good on 26th, 27th. We're good for that, right? For the Rainmaker Nation for January.
Yes. Yeah, I still need to jump in and get that knocked out, but yes.
Okay, I just want to make sure we're good. Okay, perfect. So I can put you on the list, and then you can knock that out. And then, so what we're gonna do is we're just gonna let you kind of go through and have the floor with any and all questions to the end if people have questions, so you can just do your thing. And then if the questions pertain to you, right, we'll kind of address those, and then people may have procedural questions that may not pertain to you on the side, but you can kind of give your philosophy and mindset in regards to some of that stuff. And then most of these people you'll know because they're in your organization or with Symmetry. So we'll just kind of give you the floor with a quick intro, and then we'll let you have it. And then there may be a couple questions at the end, and then we'll get you out of here.
Yes, sir.
Okay.
Everything pulled up.
Yeah, and then last thing, again, I don't take this lightly, so definitely appreciate you hopping on to add some value and pour into some folks that have some questions, and what better person to do it than you, so we definitely appreciate that.
Well, the only thing I ask is, let me get a copy of the recording.
Oh, yes, for sure. That's the first thing that's happening. I'm going to send it over to you. So make it rain, and I'll get it over to you as soon as possible, okay?
And then we got to talk about some ads here soon, I know, but that's a conversation for another day. But
book on the calendar, man. We'll get you on there.
I got you, Jack. I got you.
Yeah,
for sure. All right. Hello, everyone. So, we got the man, the myth, the legend in here, Mr. Edward Pritchett. Looks like everybody can hear me. A couple things. Number one, this is going to be an awesome training. So, please, yes, I am. Please make sure that if you can turn your cameras on, right?
Anything right now.
If you can, that makes this a little bit more interactive, so Edward doesn't feel like he's talking to himself. You can see your beautiful faces, kind of gives you energy. Jerry, is good to see you. What's up, Doc? Octavia, Jocelyn, David, and then Kaylee, somewhere with the Hawaiian beach background, I'm sure. So what we're gonna do is Edward's gonna talk all things sales and particularly go into some IUL stuff as a specialist and with his expertise. And so what we'll do is we'll let him go through his entire presentation, and then we will open it up for Q&A in regards to particularly what Edward's talking about. If you have any additional questions, please save those until the end for a cool kind of. Let me let some more people in. Sorry. This thing is driving me nuts. Okay. So if you have any questions, we'll save those until the end and answer those. But it's good to see you. If you can turn cameras on again, please do so. We appreciate all of you being on here. So without further ado, Mr. Edward Pritchett, the floor is yours, sir.
All right. Well, good afternoon. Getting my screens set up. I hear some of you want to sell more IULs. Is that correct? Is that what you're looking to do? All right. Well, just a little bit about myself. Edward Pritchett, been working with Arturo now. On and off, I would say, Arturo, we've known each other now for probably going on 2 years, but have had the opportunity to utilize Arturo's wealth of knowledge from a lead generation standpoint when it comes to, how can we get in front of more people who are looking for index universal life, who have been hearing about IBC, infinite banking concept. There's so many. If you've been on TikTok or Instagram in the last 6 months and you search for any of these things, guys, I see some people smiling and shaking their heads. I mean, like, there's so many people out there talking about how to be your own banker, Nelson Nash, all these different things when it comes to utilizing IULs to not only protect yourself from a life insurance standpoint, but to be able to increase your family's wealth and to basically bank on yourself, to have that extra reserve, that extra cash available, and to be able to utilize that cash more than once. And I think if you're on this call, you've probably already looked into that. So I'm going to assume, that you've done your research on what an IUL is, how it can be leveraged by our clients, so that you can then go out and help them take advantage of it. Because that's what most people aren't able to do, right? Like, they can do all the research, they can listen to people talk about infinite banking, they can go out and read the book, but at the end of the day, when it comes time to actually get a policy, they need a life insurance agent. And that's you, right? I'm assuming. Shake your head yes or no, just making sure that I'm talking to the right folks here. Okay. So let's start at the beginning, and then I'm just gonna work my way through this as far as what I'm currently doing, just to give you some idea. Recently, I utilized Arturo's system for 50. I just wanted to trial it out. Like, I get a lot of my index universal life clients from my existing clientele, the leads that I'm constantly going through already, but those leads are more general life, mortgage protection. Anybody else working those kind of leads? Okay, so I mean, those leads are great for IULs. There's a lot of those clients who they want to yes, get life insurance, but they're also wanting to make sure that they're taking care of their family in a very strong way. But to talk to someone who is actually looking for an index universal life, they've already been doing their research, you're just increasing the warmness of who you're talking to, right? Like, whenever I'm talking to someone who came to me as a general life lead or an existing client, I'm having to really break down like what this is, help them understand that no, this isn't a scam, help them understand that yes, you can use your dollar more than once, right? We're having to do a lot more of an educational piece when it comes to that client. But if I'm talking to someone who, when they clicked a link or when they clicked a form fill, they were looking for an IUL. They were looking for the infinite banking concept. And so that puts us into a different space when it comes to that particular type of client. So that's what I'm going to talk through. Hopefully that's okay. I see, Jack, you're shaking your head that that's what we're here to talk about. I'm assuming you're working with someone who already knows a little bit, just enough to be dangerous, about index universal life and how it can be used to build your own bank while at the same time protecting yourself and your family. Whenever I tried out the system that Arturo has for generating these leads, I got 50 leads. I went through those in probably about a total of 4 weeks. I'm still working through those even right now. But so far, I've written just over $36,000 in premium, annual premium volume off of those leads. It's a total of 7 applications, right? So we're talking about people who they were interested. The largest one of those is putting in $2,000 a month into their IUL, and that policy has been approved. And that was written out 3 weeks ago. So these are people who have a much higher intent. And as long as you present this in the right way, then it's just a matter of time. There's many of those that are in that first batch of leads. I'm looking forward to my batch number 2, batch number 3 coming up here real soon. But as long as we present this in a way that's accessible, in a way that we, start off by connecting with the client first and foremost, by digging into what their current situation is, and then getting into the problem and solution in a systematic way, you're going to be able to help your clients too. Okay. So I'm going to start off by saying, what do you know about IULs? If you have not gone through and read Nelson Nash's book, I highly recommend you pick up that book. All right. That's got just a fundamental. It's either what your client, and I'll say that again, Nelson Nash, N-A-S-H. I think it's the 5th edition is out right now. There's been multiple remakes of this particular book. And I believe, let's make sure, I think, lo and behold, it's in my bag. So this is the book. It's not that thick. It's really easy. Become your own banker. All right, Nelson Nash. This is what it looks like. Real easy to read. When you get into it, I highly recommend you get into it. Have your highlighters ready. Okay? Like as you go through the book, highlight those parts, those particular things that you're going to be able to use later on down the road to say, okay, here's something I can tell my client I know they didn't know before. Okay? So start off by making sure that you're educated first and foremost. If you don't have a policy on yourself, that's going to be my number 2 recommendation. Okay, even if you're only putting in $150 into your policy, or if maybe you're not ready to get your policy yet because you want to put more into it, and you have kids, get a policy on your kids. All 4 of my kids have IUL policies. I'm putting in $150 a month to all 4 kids. My oldest, who's 8, he's had this policy for 7 years. We have already a little over $12,000 in cash value built up in his policy. All right. Why do I say that? Do you think it comes across genuine to my clients when I say, oh, by the way, I've done this for my kids? This is what I'm doing for. There's a lot of my clients who they're wanting to do this for their kids. They think that they're too old. They're in their 50s, 60s. They don't want to put the money in on an IUL for themselves. One of the clients that I got from Arturo's campaign, he did 2 policies, one in his son and daughter, 19 and 21, putting in $400 a month into each of their policies because he wants to set up his college-age children in the right way for the future. And again, do you think it resonated with him when I said, yep, I did the same thing on the 1-year anniversary for each of my kids? When they hit 1, that's when they each got their IUL policy. 4 kids, 4 policies. Of course, I also have policies on myself. I have policies on my wife. But again, if you go through the process of putting a policy on those that you care about and love, it's going to make it come across so different whenever you're sitting there talking about it with a client. Does that make sense to everybody? So even if you're not ready to pull the trigger, run the illustrations. If you did have the ability to go and do it right now, what would that look like? If you had the money to put it towards yourself, your spouse, your kids, your grandkids, what would their policy look like? And what is that going to do for them when they're 30, 40, 50, 60? I can tell very quickly to any of my clients, when my oldest son turns 65 and he turns on his lifetime guaranteed income rider, he's going to be making around $360,000 a year at current rates. And that's if he doesn't put another dollar into his policy for other than the $150 a month for the rest of his life. Now, I'm going to encourage him when he gets older to start adding more to that, right? But this is what I can talk about with my clients because I've done that part of the work. It comes across so much more genuine whenever I'm having that initial conversation, okay? So that's number 1. Let me go over to my scripts here real quick. And I want to start off with and forgive me, I'm down here in Puerto Rico, and I just got into my office. I was off for the first part of the day, so the AC just came on. So still a hot, little caliente in the office right now, but it's cooling down here. Should be good here in just a minute. All right. So starting off, what we want to look at is what does that first call look like? Okay. So this is us making an outbound call to an IUL client. They've seen an ad. What I love about, and I don't know, Jack, if you guys are going to show later on kind of what it looks like when you're getting these leads from you all. But again, just I highly recommend them because the business is there. So whenever I'm calling, and let's see, let's anybody want to role play this with me real quick? Because that's gonna be the best way to do this. It's just to do this as a role play. Who's out there? All right, Tim, gotcha. First to speak up, like it, like the boldness. I've always heard that bashful salespeople have skinny children, so you got to be bold. Got to be bold in this industry. All right, so Tim, I'm gonna be calling you. You already know a little bit about IULs. Let's just lay the groundwork. You know a little bit about IULs. You've gone in and you've taken a look at an ad. You clicked on that ad, and I'm calling you within 12 to 24 hours of you having filled out this form. And your main interest is you want to learn more. You think this might be a good thing, but you want to learn more about Index Universal Life to really be able to build wealth for your family, to maybe help your retirement. You've heard all the what it can do, but you're just not entirely sure, but you already believe it. Does that make sense?
So, all right, I believe it.
Okay, all right. So that I'm just giving you an idea, because that's the I'm just saying that because that's the clients that you get whenever they're clicking on an IUL lead, right? Is they already believe it. That's not our job. Like a lot of us go into some of these leads and we're trying to convince them that this thing is true, but my assumption every single time is that you've done your research. And if you haven't done a lot, and let's kind of play like maybe you don't fully understand it, you can kind of play that, and I'll show you how we do that in the role play. Okay, Tim?
Okay.
All right. So, hi, Tim.
Hi, who's this?
Tim, this is just Edward. I'm giving you a call. You responded to that ad about IUL solutions. Does that ring a bell?
Yeah. I guess I was online doing something. Yeah.
Okay. Well, you put in your name, your telephone number, and you wrote down here that you're looking to grow wealth for your family. Do you remember filling out that form?
Absolutely. Yep, I remember.
Okay, perfect. Well, let me ask you this real quick. Is there anything specific that you were looking for in an IUL, or you just wanted to see what an IUL could look like for you?
Well, I mean, there's a buddy of mine that's been talking about like this banking thing that I don't even really know what he's talking about, but he says it's a way to grow money without losing it, or that's all I really heard. I know a little bit about it. I believe it because my buddy sort of knows this thing and he swears about it. So I really don't know much.
And you said growing money without losing it, correct?
Yeah, and like something about no taxes. And I don't know what he's talking about, so that's why I want to get it from you. Okay,
and is that what stood out the most? Like whenever you saw the ad, do you remember the ad that you saw for us?
Yeah, it was something about how the sort of the 4 points of how 401k could be a trap, something like that.
Okay, all right. And what was the thing that stood out the most for you that made you? I mean, a lot of people don't fill out those forms, I myself included, right? But what was it that stood out that made you want to send your information to have this call with me today?
Because I no longer believe that I'm going to be paying less tax in retirement.
Okay, all right. So it's those taxes in the future is something that you're concerned about.
Yeah, man. Yep.
Okay. Well, let me ask you this about your current situation. Where are you currently saving money for retirement? What are you currently doing to start building wealth for yourself and your family?
Well, in my previous life, I used to do something completely different. Now I'm in the financial services industry. Okay. But I had a 401k that's still in there. I just, and I'm over 59 and a half, so I could access it, but I'm afraid of taking the money out and pay the tax that I need to. And before I made that move, I wanted to see, my friend said there's some way how a 401k can be made into this thing. Okay. So, something like that.
All right. And you said you're afraid. What were you afraid of? Just taking the money out too soon, or paying any penalties, extra taxes?
Well, yeah, let's act like I'm under 59 and a half. Is that for this?
Okay, yeah, that's fine. Yeah, that works.
So I don't want to have to pay 10% penalty on top of taxes, and it's like, it's a thing,
Gotcha. So we're definitely that's a solid fear. No, you don't want to pay a penalty you don't have to. What are you currently doing? Like that's the old 401k that you have. So let's just assume that money, we're just gonna let it do what it needs to do for right now. But we may come back to that. What are you doing right now in your current career to start saving for retirement? Are you still putting money aside, putting money away? Do you have your own IRA or something like that right now?
I play around with Edward Jones. I do a little day trading.
Okay, all right. So you have a pretty good size nest egg that you built up there? How much are you putting into that on a regular basis?
About $250 a month.
Okay, $250 a month. All right. Is there anything that your employer is doing to match what you're putting into that?
Well, I'm now self-employed, so
Okay.
That's the thing. So I don't have the ability to do a 401k, or so now I have to do this for myself.
Gotcha. Yeah. What's been the returns that you've been getting in your current Edward Jones account that you're doing?
It varies. Like that's the other thing. I don't know when I'm going to be making it or losing it, but sort of around 9, right around there.
Oh, you've been 9%?
But then it's not consistent. If you look year over year, maybe I'm around 7. But I know at the end of the day, I got to pay fees and crap. So I don't even know the net,
Gotcha. And I mean, that's smart of you to think about it like that, because it's like, yes, some years you may make 9, but then what's the average, right? And then when you factor into those fees, what's your real return over a long period of time? So are you saying, like, do you like the stability and the returns that you're getting, or are you looking for something?
I'll tell you honestly, it drives me insane when I lose money. Like,
insane.
I don't want to ever have another 2008 ever.
Gotcha. And I mean, what does that insanity do to you? Like, if it drives you insane, I mean, what is that doing to your ability to grow your nest egg, and then also like your security and your future retirement?
Well, what it does is I'm not quite sure what to do with the money. Obviously, I'm not pleased with the whipsaws of the market, and really, I love when my financial planner says things are flat, but somehow I'm losing like $1,000.
Yeah.
Oh, we made 10% last year. We lost 10% this year. It's flat, but yet I'm losing money.
Yeah. Well, that's you mentioned earlier, right? Those fees, right? Whether it's flat, whether you're making money or whether you're losing money, guess who still has to pay the fees?
That would be looking at it.
Yeah, you have to pay them. All right. So, well, I mean, all that makes sense. And so I guess, how familiar are you? You said your friend told you a little bit about it and how he swears about it, but how familiar are you with Index Universal Life? What do you know about them and how they work?
All right. And here's what I remember him telling me. Okay. He said that there's no way to lose money because the money's like not really in the market, but it's in the market. But there's like a safety valve of like 0% that kicks in, so I don't lose money. But like, I don't understand. And then he says I can get to my money without paying taxes. I have no clue how that's going to work. That's what I need answers for.
Okay, gotcha. Well, and you know some of the basic principles that make these policies so amazing. And it's nothing crazy. They've been around since the 80s. They're backed by major insurance carriers that even in the turndown of 2008, the insurance companies were fine. It was the banks that, did not do so well. Even as we went through this past stuff with COVID, 19, 20, 21, the insurance companies were still paying out claims, still making sure that policies were fully fleshed out and the value of the policies was still there. So now, people get concerned about the ups and downs in the market and how that can impact their retirement. They get concerned about, right, if taxes are higher in the future, which, I mean, what's your guess, Tim? Do you think taxes are going to go up or down in the future? What's your guess?
I'll tell you, Edward, if you asked me 20, 25 years ago, I would have said for sure, like I'll be in a lower tax bracket, tax will be lower. I really don't believe that. I mean, if you look at the national debt and the way we run our country, I can't believe that I would pay less.
So you have been doing your research, because I mean, if the debt stays where it is, somebody's got to pay it, and the only way to raise that money, right, is you taxes.
Yeah,
right?
I don't even know if it's research. It's just like you listen to TV and you just see what's going on in the world. It's too volatile. I can't picture taxes being lower. So even if they're going to be lower, I'd rather just protect myself in case they're higher. You know what I mean? I don't know what the future is. You don't either.
I totally agree. And that's why I stand behind Index Universal Life policies. I have it on myself, on my children. The main fundamental working of a IUL policy is that it's permanent life insurance. So this is life insurance that never ends. But in addition to that, it has a cash accumulation vehicle that's a part of it. And the reason we call it index is because that cash accumulation vehicle is indexed to one of the stock market indices. All right. This could be, say, the S&P 500. the Dow Jones Industrial Average. There's many different ones that we can index it to so that you can still participate in the ups in the market. But because it's a life insurance contract, they have a contractual obligation to make sure that they guarantee certain things to you. And one of those guarantees is that if the market ever were to go down, your principal, the money that you've built in that policy, stays at a 0% rate of growth. All right.
Wait,
Now,
what do you mean? You mean
0%,
so
exactly.
I don't make any money.
All right, exactly. You're right. You don't make any money, but you don't lose any money. Right. This is the biggest issue whenever I'm in the stock market. It's great when the market is up, but if the market, like I'm sure you remember 2008, it sounds like, correct? How much did you lose in 2000? What percentage? Do you remember what percentage your?
Yeah, I do. 39% of my money.
39%.
I started, think about this. I started with $200,000. Okay. At the beginning of that year. And I ended up with 124 grand.
124. So would you have rather had 0% that year or what you did not earn?
Well, I would have sold myself for 0%.
Exactly. And that's the beauty of an index universal life policy, is that in the good years, you get to participate, not 100%, but you get to participate in the growth. But in the negative years, you're locked in and you stay on a plateau so that when the good years do come back, right?
Yeah.
Right? Yeah, the good years do come back. And so when the good years come back, instead of starting in the hole that you had to dig yourself out of in 2008, you get to start from that plateau. All right.
But
now,
you say something that made me nervous, though.
Okay.
You said I get to participate in some of the games. What do you mean?
All right. So there's a cost to that, right? If you want to participate in all the games, then you have to participate in all of the losses. So the way that an indexed policy does is it's indexed to that market, but they have a floor. The floor is 0%, and it has a cap. Now, the caps right now range anywhere from 9 to 14%. And that's just going to depend on what you can qualify and what we can get for you, okay? But let's say that you're getting 14% in good years, but in negative years, you're getting 0%. Your money's staying safe, right? It's not going anywhere. Do you think you're going to be up or down after the end of 20 or 30 years?
I think I'll be up.
You'll be up,
it almost
right?
sounds like the game red light, green light, 1, 2, 3.
That's a good, I haven't heard that analogy before, but that's a good one, right?
That's the one I use.
Gotcha. So this is what the basics behind an index universal life policy is that it allows you to grow your money and not have to worry about the volatility in the market. It takes that part of it out. And it's backed by a life insurance policy. And the reason we use life insurance is because the IRS has a special part of the tax code that allows gains inside of life insurance policies to be non-taxable. This is where your friend was talking about, like being able to pull out money and have money without taxes. Okay. So does that make sense? And we'll go into more detail. This is just, I just want to make sure that we're on the same page and what I have is what you're looking for. But does that make sense to you?
So far. Yeah, I'm not the brightest, not the sharpest tool in the shed, but I definitely following you so far.
Okay. So now because it is a life insurance policy, I do have a couple of health questions for you. Do you mind if I ask those real quick?
Sure. Now, you want me to tell you the truth or you want me to lie to you?
Well,
I mean,
okay, we're gonna little timeout. We're gonna pause. All of y'all know how to ask health questions. Okay, how old, smoker, non-smoker, recent hospitalizations, height and weight. Get the generals. Okay, we're not trying to go into all of the details of their health. We'll get that later. This is to set the appointment where we're hopefully going to be right in the policy. Okay, so I'm going to go through the health questions with Tim, and then after that, I'm going to say, okay, the last thing that all successful investors look at is liquidity, okay? So not just because of your basic liquidity that you have, right, is being able to actually access that money, okay? And I know it can be pretty frustrating. You said you're not 59 and a half. You didn't want to pull money out of your retirement fund right now because you have to pay a penalty and taxes on it, right? Is that correct?
Yeah.
What's the number, or do you have a number in mind that you want to hit? Say, let's say you said you're 45. So a number that you have in mind 20 years from now when you're 65 that you're wanting to hit to say, this is the income that I want to be taking out every single year.
I've actually thought about that. So what I want really is to supplement my retirement income with like maybe $1,000 or maybe $2,000 a month if I can, somewhere in there.
1,000, 2,000 a month. All right, perfect. And I wanted to ask that because what I'm going to do now is I'm going to go and do some research. I do have another call coming up here pretty shortly, but I want to go ahead and get you on the calendar where we can actually dig into what this would look like specifically for you. I want to run illustrations just for you, okay? You're in North Carolina, correct?
Yes.
All right. What usually works best for you, mornings or afternoons for a 30 or 45-minute call?
Mornings, absolutely.
Mornings. Okay, perfect. Let me take a look at my calendar here. All right, so I have this upcoming Thursday. I could either do around 9 o'clock or right around 11:30. Which works best for you?
9 a.m. Let's bang up.
9. All right, we'll kick it off first thing in the morning. Okay, and then the email that I have for you is tim@gmail.com. That's correct.
Mm-hmm.
All right, you did good. You got the first Gmail account for your name. That's not too bad. All right, and I have a little bit of homework for you. Okay, I'm gonna send you over a calendar invite for this, but I'm gonna shoot you over a quick 20-minute video just to walk through this video. This will go into some more details about Index Universal Life. I'm sure you've been doing your research already, but this is just my take on it, and that way we'll be on the same page whenever we get there. Okay, so I'll shoot that over to you here via text and email here in just a few minutes. I'm gonna go ahead and text you right now. Let me know that you got that. Did that come through?
Okay, yeah, I see it.
Okay, perfect. And I got your email here. We got that coming out to you as well. And now again,
what video are you going to send me, Ed?
All right, it's just a quick 20-minute video, me talking about Index Universal Life. All right, like how it works. Okay. Yeah, it's gonna be me, how it works. Just kind of walking you through the process, and we'll probably re-walk through it when we talk on Thursday. But this way, I'll just be able to answer any questions that you had after you've had a chance to go through it. Does that make sense?
Yeah. What's the sort of the time frame on? What do you need? 15 minutes, half hour? What do you need?
Well, on Thursday, it'll be about 30 to 45 minutes.
All right, 45 minutes. Got it.
All right, and so that's Thursday, 9 o'clock. I'll get that over to you as soon as we jump off the call here. Is there anything else you'd like me to address at this particular moment?
No.
Okay. All right. Perfect. Well, Tim, it was great. I'm glad I caught you in between some of my other appointments here, and I look forward to speaking with you on Thursday. Thank you, sir. All right. So that's it. Okay. And I do recommend, okay, for this 20-minute IUL video, guys, this is where it's going to take, you're going to have to do some research. I'll be willing to share the PowerPoints that I'm getting ready to walk through here in just a second. But you want it to be you. All right. I'm telling you, you want it to be you. If you use somebody else's, then that's who they're going to want to buy the policy from. If it's not you doing the PowerPoint or the video, whatever it is, if you already have a video of you talking about IULs, I do for every advanced market that I work in, and I do stuff around debt-free life. I do stuff around annuities. I have a video of me talking about it, okay? And that's what I'm gonna send to the client. I want them to do that research ahead of time. And then whenever we get on the phone on Thursday, they're already gonna be prepped. We're not gonna have to do, this is not me doing a long presentation. I'm verifying information, right? I'm digging into the problem a little bit more. What all did I find out during that call with Tim just now? I know all the health stuff for the most part, so I know who I can get him qualified with. I know how much he wants as supplemental income. And here's the thing, these people will be, they know what they're looking for. So if he's wanting $1,000, $2,000 a month in supplemental income, how simple is it to do that in an IUL? I know he has approximately $250 a month that he's currently setting aside right now. I know he has a 401k that's locked up somewhere else. What is my mind thinking about? I'm thinking about, well, with that, we may have an annuity in place, right? Like I'm not using that for the IUL at all, but there's some annuity potential right there, okay? Because we have someone who is concerned about the ups and downs of the market. They don't want the volatility. As you guys saw, whenever I was doing this, I was trying to lean back a little bit, and this is what I do if I am having a Zoom meeting. I use my hands a lot when I'm talking about this stuff, okay? You know, I'm talking about, like, do you want to be down here, or are you looking to be more up here? You know, what does it look like? Are you concerned about the ups and downs in the market? Like, even if I'm on the phone and I typically am on my Bluetooth, if I'm doing it, I'm doing those same hand gestures because the tonality, and you heard my tonality change. There's sometimes I was concerned. There's sometimes that I was challenging towards them. There are sometimes that, I just had a curiosity. Well, what do you mean by that? What's going on there? All right. So I'm not just gonna talk in a monotone sort of way when I'm talking to them, but I'm gonna keep myself low and as slow as I can. I was talking a little bit fast because I'll be honest, whenever you're doing a training like this, sometimes you rush a little bit. It's a lot of eyes looking back at you, and David Alvarado has 22 people in his office right now staring back at me. So it gets me talking a little bit faster. But what you want to do is always remember, I'm not overly enthusiastic. I'm energized in what I'm talking about, but I'm trying to keep myself as low and slow as I can, but I'm also trying to condense things for time. So when it comes to that, yeah, go ahead. I was going to say, when it comes to that initial call, any questions about that initial call or the purpose of that initial call? Go ahead, Tim.
So the question would be, what if I came back and said, yeah, I'm diabetic? Now that's sort of, do you bring up the surrogate thing right away, or what do you do?
Nope, not right here. I need to find out about him or her and what their current situation is. All right. I'm not, here's the thing. If they are diabetic, guess what? We have carriers that can handle it if they are diabetic, right? Now, when we actually look at their numbers, when I run numbers, I'm going to run it for a diabetic and see, what table rating that's going to put them at. I'm going to call some of the carriers. That's why today is Monday. I set the appointment for Thursday. I want the appointment to be 24 to no more than 72. Thursday may be a little bit long. Probably should have done it for Wednesday, but no more than 24 to 48 hours. I want that first initial appointment to be very shortly after that first call, right? Just enough time for them to go watch that 20-minute video and get that taken care of. Does that make sense? But I'm not going to talk about the surrogates or anything like that. Who else who could stand in for them until we actually get on the call. And then when we're on that call, it may be something where I'm like, okay, here's what we could do for you, but I have some other options as well. Tell me about your wife, right? Do you have any kids, right? So like we have the options to pivot whenever we get to that point. But that's a good question, Tim.
And what about the only way to really make these things really earn money is to sort of max fund them, or at least, in other words, ask for less death benefit for the same premium that you would pay for the most death benefit. But you've never brought that up during this. When do you bring that up?
So that's not going to come up until we're actually doing the illustration. One of the things I make sure to do on every illustration is when we get to the point in the illustration, I use a lot of F&G. I also use National Life Group, are kind of two of my biggest ones for IULs right now. But I always show them that I hit that, minimum death benefit, max cash value, non-MEC button. Right. And so that's if you haven't seen it on the F&G makes it very clear, and I make it very clear to the client that's what I'm doing. And this isn't because I'm not trying to get more commission or premium from me. I'm wanting to make sure that we're building the most cash value. Now, if you tell me right now that you want more death benefit, then we can modify that. But what we're trying to do is make this thing be optimized for building cash value for you. Is that what you want to do? Yeah, no, that's what I want to do. Okay, great. Right.
It is frustrating that we get less commission when we do the right thing for the client as far as building cash.
Yeah, well, I mean, it's frustrating, but here's the thing. If you sell a whole bunch of them, it's not that frustrating anymore. You know what I'm saying? If you're selling one a week, yes, that could be very frustrating. I'm with you on that. That would be very frustrating if that's what's going on. But the goal here is to be able to take, 50 people that say they're interested in this and find 7, 8, 10 of them who are like, yeah, let's go ahead and get this thing moving, right? I think, and I don't want to speak out of turn, Jack, but like the price for 50 leads is how much these days with you guys?
Yeah, right now it's 1,500. So
$1,500. And if you can write, let's cut what I wrote in half. Let's say you wrote 15,000 in premium off of a $1,500 investment. Are you going to be okay if you can do that a couple of different times? And that's me doing it and I have a couple of other things that I do outside of just writing business from time to time, right? So that's where we make that up in the long run. All right, I got David's office with their hand up.
Hey, I appreciate Joshua Quillen. How you doing?
Doing well, sir.
Good. Couple of questions. What states are you buying these in?
So right now, with the program that Arturo has, I'm licensed in 47 states at this point in time. So I haven't asked for anything state specific. I'd have to defer to Jack to see if there's any state specificity that can happen with those.
The more the merrier.
When you're creating the video, that's a new concept, right? I've never tried that before. Do you tell the potential client to write down any questions that they'll have while watching the video?
Yeah, so as you heard, whenever I was doing that, like, as you're watching this, take down any notes, anything that you're thinking about, and then, let me know. We'll have that available whenever we have our appointment this upcoming Thursday. So yes, I'm asking them to take notes. Any questions that come up, anything that they're concerned about as they watch that, to let me know whenever we have our full-on meeting. Okay,
good. And then lastly, I bought my first batch as well, and I got a hold of almost everyone. I had a lot of no-shows. And one big thing, and maybe everybody here, a lot of people can relate to this, what I did not do is, I'm going to call it build the need and really find what they were looking for during that initial conversation. It was much shorter. I kind of just cut to setting the meeting. They set the meeting, no-show. Obviously, I didn't create urgency. I didn't create a reason for them to have to show up, right? So I love what you did and how you created that. That demonstration that you did with Tim was pretty lengthy, right? And what I mean by lengthy is, I'm imagining not everyone you spoke with when you call that first time talks that long. Are they more, did you find that, hey, call me later, I can't talk right now? Or were you able to get through most conversations 5 to 10 minutes, no problem?
Yeah, so the one thing, Tim was acting as though he really wanted to figure this out, right? And that's where first, I'm going to start off with just, getting that general connection in the beginning, making sure that we are talking to the right person. But then the better you can dig into the situation, what's their current situation, okay? If you can dig into their current situation and start getting them to reveal that information to you, and any pushback, and let's say, Josh, that I'm talking to you, and I'm like, so Josh, tell me about, why are you looking for information about Index Universal Life? What's your primary concern? What are you thinking about?
No, Ed, I really don't know much about them. I just heard about them. I saw the video and it looked good, so I inquired.
Okay, all right, I can appreciate that. That's fair enough. Now, most people who are looking for something like this, they're wanting to be able to build wealth because they don't like the ups and downs of the stock market. They're worried about how much they're going to have in retirement in the future. They don't feel that keeping their money tied up with banks and paying a lot of interest to them and not getting a lot of interest is really serving them. Do any of those fit you?
Yeah, I would say so. That sounds good.
Okay, which one of those sounds good? What sounds good there?
Earning more interest would be nice. Yeah.
Why would that be nice?
Well, I have some money saved. I put money away into my savings, and it doesn't make any interest. But I can use it whenever.
How much interest is it making, if I may ask?
Like 10 or 10. No, I'm sorry, 1/10 of a percent. It's like money under the mattress.
1/10 of a percent. And what's inflation like right now?
It's much higher than that, right? I think last year was like 7%. Yeah.
Okay. So are you making money or losing money on that savings account?
They would be losing, right?
All right. Do you want to keep doing that? Is that something you're like, yeah, hey, let's keep giving the money back to the banks?
No.
No. Okay. Well, so that's what I'm calling you about. So that's what an IUL can do for you. Now, that's something that you're interested in possibly making some kind of change.
Yeah, that sounds good. I see what you're doing, Ed. You're identifying where you can find the need at. And once you get that there, then you dig a little further. You create the value there by them actually really realizing what they currently have, how it can benefit them, and then build on that even more.
Exactly. Right? The more you can dig into that situation, like I'm not going to move on to trying to book an appointment and get health information, do all that. Yes, Tim made it pretty easy on me, right? And I told him like he was looking for it. He'd already been doing the research. But in your situation, it's like, tell me something there that's going to, shut me down, right? Like what I'm asking you questions about your situation. Now, this has nothing to do with me. I want to find out what's going on for you. What are you happy with? What are you dissatisfied with? And when I find out what you're dissatisfied with, I hate to say it, I'm going to be a little bit mean because I'm just going to press on that sore spot as much as I possibly can, right? To get you to say uncle. And the uncle is we need to have an appointment so that we can take care of that, so that doesn't continue to happen for you.
This creates urgency to where they actually want to sit with you. They're excited.
And it creates the urgency where I don't care what they may be doing right now. Like when they start feeling that pain, and then I back it up with some logic here and there, right? And this is why you have to understand what these policies do. You have to understand the general market. Like, you have to be doing your research. You have to educate yourself around these things so that as you're talking to these clients for that initial appointment, when it's time for them to have that appointment on Thursday, right? And there's some things that I would say I could have dug in deeper with Tim. I was just, again, keeping it short for the sake of this call, but like, I can really bring out and highlight that situation that they're in, so that then whenever I get into, are they aware that there's a problem, right? Then now we have this urgency that, gosh, man, you're right. Like, I'm getting 0.1, inflation's 8%. I'm losing, what is that, 7.9% every year on my money just sitting there, and I'm putting in $300 a month into that. Is there something better? Yeah, there's something better. That's why you sent that thing in about the IUL information, right? Like, you've been looking, what else have you heard about it? Right? Otherwise, you wouldn't have sent that form in. So like the more I can relate back to why you actually sent this form in is going to help solve this issue, the situation that you're in, this problem that you have, and you're aware of it, and you want to solve the problem. Now we're gonna have an appointment, right? And I get into a little bit, like, I teased out a little bit of the solution, right? For Tim, he told me a little bit about the stock market losing 39%. Right. And I could have pressed on that 39% loss a lot more, but I, again, sake of time. And that's where, whenever I talked about the solution, we talked about the floor and the ceiling, where you're still in the market, but hey, would you have rather, Josh, gotten 0% or negative 39% back in 08? Right. So I want to give some time to that, let them internalize it. Don't talk over that. Every time he said any of those emotionally triggering words, did you hear me repeating those back to him? Like, anytime he said fear, concern, worried about, loss, like, I'm gonna repeat that right back to him. Tell me a little bit more about that feeling of insanity that you mentioned, right? And I want to get him talking more and more about that. So the more you can make the situation real and in that moment, you can keep him on the call, that first call, for 10, 12, 15 minutes. And now, whenever you have that appointment booked, guess what? They're going to be showing up for that appointment.
What do you say, lastly, what would you say if they call? Yeah, Ed, I'm interested, but listen, I'm at work right now. Now's not a good time. They are not willing to talk at that moment. What do you say to get that call back?
So if they're at work right now, my question would be, well, I understand I'm working hard right now too, but I want to make sure that we get this valuable information to you. All right. Is this really a concern that you have to make sure that you protect and grow your wealth in the future? Or is this just something that, you can send in another form later and see if somebody else can call you back? Because I'm not sure when I'm going to be able to get back to you.
Gotcha. How do they reply to that?
I'm okay to lose. Like, I got 50. I'm okay I don't need all of them, but I need the ones that I'm going to talk to. I mean, and a little bit about my time, right? I don't have time to waste or play. So it's like, if I got you on the phone, you picked up. If you're busy at work, don't pick up your freaking phone. You know what I'm saying? So like,
yeah.
So if it's important, I'm going to challenge them on that, and then that will allow us to go on into, really digging into the situation for a second. And if we get to the point where they're like, I really do have to go, but man, and this is what I've gotten. I really do have to go, but we got to talk again. Like, can you call me back in 45 minutes? Or I got my lunch. Like, I want them begging me for when can I call them back. And I say, okay, well, what we can do is I can go ahead and book us an appointment. I'm going to send you some information. I want you to watch it. When you get it, though, I need you to text me back as soon as you watch it and let me know if it answered some of your questions, or, what questions it may have brought up. Like, I want to get some additional engagement from them.
Yeah, that's a 20-minute video. So you're sending that regardless. You're going to try to keep them on, get a little information, create that urgency. Make sure that they are interested.
I'm sending that if I have an appointment. I'm not sending that if I don't have an appointment. Like, we're still gonna have an appointment. I'm just gonna double down on it if we're having to get off real quicker than I want to. Like, if I'm not the one ending the call, then I'm just gonna make sure that they do something extra for me other than just showing up to the appointment whenever I send them that video.
Gotcha. I see. Thank you.
Yes, sir.
What if the call started this way? Our interplay, our role play started this way. Tim, what do you know about IULs? Well, I heard that I could become my own bank, into the banking. That's what I'm interested in.
Okay. Great. So have you read Nelson Nash's book?
No, I haven't.
Oh,
But
okay. Well,
I bought Doug Andrews' book, and I know a
okay.
little bit about it, you know.
All
So
right.
I know about indexing because I read this FIA book. So yeah, I have something.
Okay. All right. So you've definitely been doing your research. Why are you wanting to become your own banker right now? That's a pretty lofty goal, to become one's own bank. What has you having that desire for yourself at this point?
Because I heard that you can actually like leverage money from your policy while it's actually still in the policy.
Uh-huh.
I'd like to get involved in flipping homes.
Oh, flipping homes. Okay.
Yeah, man. So I was thinking maybe I could, use the money that's in this IUL, but I don't know how the loan rates work, and like, does it
Gotcha.
really work? Is it real? Like, I don't know.
Okay. All right. No, well, that's perfect. I'm glad you got the right person. I'm a real estate guy myself. I've used the policies that I had to help put down a down payment on the home that me and my wife are living in right now. So like if flipping homes is something that you want to do, if buying your own home is something that you want to do, we can definitely show you how to do that. Now, is this something that you're thinking about kind of just like as a little hobby project, or are you wanting to make like you really have to get into this and be able to do this?
No, I'm all in. Like,
you're all in.
I
Oh,
have
perfect,
money in a
perfect.
401k that I don't want to put into an annuity because I want liquidity. An annuity, I don't have liquidity.
No liquidity, definitely. And you don't really have liquidity in your 401k. How much liquidity do you have in your 401k?
Same lack of liquidity. That's why I don't want an annuity. I don't want to experience that again for the next couple of years.
Gotcha. So you're under 59 and a half. I mean, how old are you right now?
Real deal. I'm not telling you. I'm 61, but for this scenario, I'm 59. I got 6 months.
So right now you can't even access your 401k, right? Because you're gonna pay those penalties in addition to the taxes.
You can 72T distribution it.
You could, but then one of the things you're going to be doing is you're going to end up using that money, and that money's going to stop working for you except in the one place you put it. But what if I could show you how you could make that money work for you twice? You could use it for the real estate, and it could still earn you interest. Would that be
That's exactly what I'm interested in. I just want to know how it works.
That's all right, perfect.
All right, cool.
Well, so you see where I'm going with that? Like, I'm still going to dig into like what is it that's driving that person to have filled that form out, send it in, and get us to where we have an appointment where we can actually dig in and start talking about it. Does that make sense? JB, you've been waiting patiently. Go ahead, ma'am.
Okay, so my question is, when you talk at the discovery call, the one that you have with him, and he did say like he would like to be able to get like $2,400 per month, would you also find out at the discovery call where how much money he has left after he pays all his bills and stuff that he would have available to put into this IUL or not?
Not right there, because remember, he did tell me, because the one thing that I'm worried about in the discovery call is how much is he currently saving for retirement. And he told me $250, right? Because I asked about the old 401k. He's not contributing to that. Said he was self-employed. I was like, so how much are you setting aside for yourself right now for your retirement? And that's where I got the $250, right? So I want to know with what because what I don't want to do is scare somebody into like, we're trying to get them to spend more. Now, when we get on the actual call, we'll be able to dig in and promise you, I'm going to find additional funds that we can start putting towards that, right? But at least I know I can start with 250. And then the other question that I ask is, when you get to retirement, because that was his concern, was retirement and having some supplemental income. When he gets to retirement, how much money is he wanting to pull out? And when he told me $1,000, $2,000, for most people, if they're in their 30s or 40s, can I make 250 turn into 1,000, 2,000 by the time they hit 65? Yeah, no problem. That should not be a problem whatsoever. All right. Now, had he told me, well, I want this to provide me with $6,000 a year or $6,000 a month whenever I get to retirement. Okay. We're not gonna be able to do that with 250. And now it's gonna at least give me an idea so that when we go into the conversation, we can start digging into, what do we have to give up to get in the end? Does that make sense, JB?
Yeah. What if he had nothing? He wasn't saving anything? Because for you to do an illustration, would you just take like if the 2,400, the 2,000 per month that he would want, and you work that back for the illustration? Or if he's not saving anything right now, he just does regular savings or just has his money, would you ask him, or you would just use that $2,000 per month desire when he retires to work the illustration?
Yeah. So if he doesn't tell me that he's setting aside anything right now, I'm still going to ask them, well, what are you wanting to put into a policy like this to help build and fund your retirement. I still want to get an idea of like, what does he want to, like, I'm trying to help him buy. I'm not trying to sell him whatsoever. I'm trying to help him buy what he's wanting. So I still want to give, like, people have an ideal in mind. Like, I want to use what they're already saving, right? Because that's the easiest place. And then I can add to that, because that's when we help them buy more for their future. If he doesn't give me anything, I'm not saving anything, then that's where I want to dig in and ask those questions as far as, okay, so, what is it that you're looking to invest into a policy like this in order to grow it for yourself? I just want to get a mindset of what they're thinking right now. And whether they tell me $50, $100, $350, I have at least a starting point. All right, any other questions before we talk about the equipment real quick?
Are you willing to share your video so that we can have a template or not?
I will talk with Arturo about that. I'm happy to template it out for you. Again, the only thing I'm just saying, I wouldn't send out a video of me doing it.
Not going to be you. Here's the issue.
But
I
yeah,
can't keep things short and sweet. So
yeah,
I got to take my spiel and make it understandable to the regular man.
Got it. So yeah, we can do that here. I'll get with Arturo about that for people who attended this here today. All right, so let's talk about I'm gonna do this real quick, okay? Whenever it comes time for the actual appointment, I'm gonna start off that appointment, and we won't role play this one just for the sake of time right now. But I'm gonna start off that appointment by just saying, hey, look, Tim, you told me this is what you were looking for. You said that you suffered some big losses back in 2008, and you're wanting to really not have to go through that again. You don't like the volatility. You want to have a strong rate of return, and you said you're tired of paying all those fees, right? So we're going to restate the issues that he brought out to me, and we're going to talk about those in the beginning. So we're going to go back over the situation. Starting off the appointment, you're going over the situation. Go over it again, dig deeper. Now you have a little bit more time. Now there's a little bit of trust already, because you said you were going to do what you were going to do, okay? So I'm going to go over the situation, and then from the situation, we're going to dig back into the problem. And the problem that Tim really brought out to me was, number one, lost 39%, can't have that happen again. We're going to talk about what would that look like if the year before he retires that same scenario happened again. He brought up to me that he doesn't know the future, and he doesn't think I do either. And I'm going to reiterate that. Neither of us know when that next big hit is going to take. Again, guys, this is where you have to take notes in that first call, and you have to dig in. You have to do your research, right? Like, what are those things that you can highlight from what they're sharing with you that's going to really make sense? Then we're going to dig into the issues that the problem will cause, right? So it's like, okay, let's say you keep on doing what you're doing, right? Like, Tim, you got the 401k, you could go ahead and just keep contributing the 250 that you're doing right now. You get to 65. Have you taken a look at what kind of payout your current 401k plus what you're saving right now is going to pay you? Have you looked at what that number is? Do you have an idea? And maybe they do, maybe they don't, okay? But like, if they don't, what would you guess that would be? Right? What would you guess your number would look like? And is that where you want it to be, or is it a lot lower than where you want it to be? And what are most people going to say? Even if they don't know the exact number, they're going to say, I don't think it's going to be enough, and like, God forbid another 2008 happened, and I'm sitting here just I keep showing, like, here's where you are, and this is what retirement is going to look like. Now, with an IUL, we can start building you in a place where, again, we never drop below zero. We always go up little by little by little by little, and we have that benefit there in the end. All right. And that's if that was his biggest problem. I want to highlight and dig into that problem in a very big way. Then I'm going to get back to the solution questions. Okay. I'm going to repeat back whatever they said that they wanted. Okay. And I would say it to Tim, okay, Tim, how would it be different for you if that you had the assurance that when you retired, you knew, one, your money was going to be there. Two, it would be X number of dollars. You said an extra $2,000 a month. No matter what happens to you, you're protected and covered. And God forbid something happens too early, there's also a death benefit for your family. What would that feel like?
I think I'd sleep better, number one, man.
Sleep better? Okay.
And I might actually be able to spend a little bit more now.
Okay. You might be able to spend a little bit, like have a better
I'm so frugal, I don't want to spend my money because I'm afraid of the future. You know what I mean?
Okay. And
what is that? I'm not living my best life.
What's that fear of the future? Okay, just not living your best life. What else is fear of the future?
I should be able to take vacations, but I'm afraid, like, I don't know what my tax is going to be in the future. I have no clue.
Gotcha. All right. And now, how long would you say you've been living under that fear of the future because you don't have that assurance?
When I left the job and started to work for myself, that's when it really started. That was about 4 years ago.
All right. And so now I'm going to slip, as he stated that, I'm going to slip into the consequences. Okay. So we've painted, here's what it could look like, where we could go. And now I'm going to talk about the consequences. And that's going to look like this. Okay. Well, Tim, I mean, thus far, you haven't done anything to change what you're doing. What's the consequence or what's going to happen if you just keep staying in the same spot you are right now?
Well, I mean, it sounds like you just did the definition of insanity. If I do the same thing and expect different results, that's a little crazy. So I gotta do something. I just don't know what I'm going to do.
Okay. And now, if we look back at all the time that you've been thinking about what you could do, and you've looked at IULs before, is this the first time that you've looked at IULs as a solution for this?
First time.
First time. Okay. So if we look at the solution that we have, does it make sense that if we have contractual guarantees from life insurance companies that they were paying out in 07, 08, 09, they were paying out in 19, 20, 21, ups or downs of the market, they're there. Does that sound like a solution that could take care of the situation you find yourself in right now?
Yeah, it's funny you brought up the 20s. I read this thing I think it was Instagram or something, where Babe Ruth actually was able to live a life that should have left because he had life insurance cash value. So that that started me to believe that maybe this is a real deal thing. That's why we're having this conversation.
Gotcha. Okay. Well, based on what you've told me, and correct me if I'm wrong, I mean, you could certainly stay and continue to do exactly what you're doing right now. But based on what you've told me, what we're looking at with this IUL would actually work to get you what you're looking for. Does that resonate with you?
If it does what you're telling me it does, which my money goes tax deferred and I get to access my money tax free, well, I'm down with that.
Okay.
And most importantly, I'm not going to lose any of that money. Then I'm really down with that.
All right. So let me show you a couple of things, and you'll recognize this from, what we just talked about here the other day. So I'm going to just show you one quick graph.
Everyone should hit the speaker so he's big if you want to see this graph he's about to put up.
All right. So is everybody seeing the power of indexing interest credited and benefited downside protection using Index Universal Life? Everybody seeing that? And I will say to those of you who are, if you work with Advisors Excel, this is who I got this from. I do a lot of my annuity work with Advisors Excel. They put this together. This is not me putting it together. But these graphs are all over the place. Okay, so you can find these. But I'm just showing you how simple. Like when you see the 20-minute presentation, you'll get a chance to see like full PowerPoint, like the whole deck. But this is really all I have to use when it comes to the actual appointment before we go into the illustration. I'm trying to keep my presentation, the presentation part, we make the presentation way too long. Okay, if the client is interested and they've told me, yeah, from what you've told me, this solves my problem, this is the solution, this helps me avoid the consequence of staying right where I'm at today, then this is all I need to show up. Okay, so I'm gonna say, okay, Tim, now if you look at the lines that we have here, this is why an IUL works. Okay, and this is the actual last 22 years. All right, we're not going back to like some special time from 1995 to 2007, something like that, just so I can capture the worst times or anything like that. This is just the last 22 years. So going back to 2000, if you started with $100,000 of value, okay, and let's just say interest rate floor, you just put $100,000 into a savings account that just didn't even earn any interest, just stayed $100,000. That's the blue line. That's just for a frame of reference, okay? The red line is the actual total return of the S&P 500. So if you had you were indexed into all 500 of those stocks that make up the S&P 500, that red line is the ride that you would have been on. And you probably experienced some of that, right? Like you experienced that dip. You said 39% in 0708 S&P. So you were a little bit worse than the S&P. So the S&P was down 37%, right? That the hard number for them. Okay. 02. I don't know if you remember back then. People seem to forget about 2000, 2001, 2002, but we had 3 years in a row where it was -9, -11, -22%. Pretty rough time back there as well. And there's also a lot of good years, a lot of up years, more up years than down years, right? And if we look back here at 2021, man, that was a pretty strong year, even with everything going on, 28% jump in the S&P 500. But what happened the year later? 2022, we finished -18% down. So it's not that the S&P 500 isn't going to be a place that you can put money and make money. You can grow your money there. But the things that you have to take into account is, you mentioned earlier, there's fees involved. So this is just the total return for the S&P 500. That's no fees included in there. If you're with any brokerage, you got to deduct your fees as well. If you're in a 401k or IRA and you're under age 59 and a half, can you touch this money, Tim? Nope. Not without penalties, not without extra taxes. Okay. So is it truly liquid if you're really trying to set this aside for retirement? I'm going to allow the client to answer. Okay. Now the green line is what would have happened in an index universal life policy. And this is a modest index universal life policy. Okay. On this one, the cap is 11%. Of course, the floor is 0%. So I have some products that we'll take a look at here in a second that have caps above 11%. Some of the ones that I have illustrated for you, the cap is 13.5%, but this is just at an 11% cap. All right. And what you can see is in those years, like let's look at 2003. You see how the S&P was up, even though you're still below the $100,000 line, but the S&P was up 28.68%. You see that right, Tim? Now, that year, you would have earned the cap, the highest point, or 11% in your policy. The next year, S&P was up a full more than 11%, so you earned 8.99%. And the following year, the S&P was up 4.91, you would have earned 3. The year after that, it was up over 15%, you would have earned 11. But you can see how as the S&P grows, your policy is growing. But any of those years, like let's look at 2008, when the S&P was down -37%, you were safe and stable at 0. 0 is our hero when it comes to this type of policy. And just continue to follow the trend, and you'll see how you're always going to see growth years over years. I don't want to say year over year because there's some years where you stay on a plateau. But as soon as the growth starts happening again, you get to grow as well. And you can see how the index universal life was beating the S&P in real rate of return all the way up until 2019. And for a period of time, the S&P passed. But then, as the S&P does, it decided to give up the gains that it gave you, right? But here's
in essence, you're saying that, look, it's the same thing, because this graph tells me that I get to the same point whether I'm in the stock market or not.
Correct. And then the next thing I'm going to go to is I'm going to talk about liquidity. Now, here's the other thing in that, all right? You see that value, that cash value that's continuing to grow. Okay. Let's say in 2015, you needed $100,000 for something, Tim. If you had your money in an IRA or a 401k that's in that red line, you would have had, let's say 2015, you would have had about 180,000. So you would have had the money to pull out, but had you pulled it out, the IRS would have charged you penalties and taxes on the money that you had there. But you can borrow from this policy and pay nothing in taxes. You can pay it back as you need to. You want to. I want you to pay it back because that's going to make this work even more efficiently for you over time because you're going to be borrowing it. There's a loan that you're taking out. Right now, that loan rate is typically around 5%. Okay. But where else can you get a loan for 5% these days, especially one that you don't have to qualify for, right? You just send a letter over and they send you the money within 24 to 48 hours. All right. So this money is
you don't get into the arbitrage. You don't get into the fact that you're earning 6 or 7. It's free money.
Not unless if they take me down that road, then I'll go down that road. But for most clients, like simple is simple. If I can keep it simple for them and they understand this, then we can grow into some of the other stuff.
This is my big problem. I make it too complex.
Yeah. And that's why there's no long, huge, drawn out presentation or PowerPoint. It's just a handful of things that I want to talk about. Now, if I really have to get into it with somebody, and you'll see that in the 20-minute video, we talk about taxes, we talk about the breakdowns, we talk about the different buckets of saving, but that's why I would want them to watch that in a 20-minute video, right? Whenever we come to actually do something about it, this is all I need to use to actually do something about it. And that is, of course, when we started off this, I said, hey, Tim, how'd you like the video? Did it answer all your questions? Did you have any additional questions? Okay, great. We're going to get to those as we go through this here today. So this is, and there's, like I said, there are many different versions of this chart out there. I like this one again because it's a very recent chart. And I do like, as you pointed out, Tim, that at the end, it's the same either way. But then what I get to highlight is the fact that all through this 22-year period of time, I've had access to those funds as an owner of the green line versus an owner of the red line.
Okay? And if you die, you're going to get a tax-free death benefit.
I mean, and that's what, like, we can always pile. There's so many additional things, but again, I'm gonna be touching on like what is that situation, problem, point that they're currently dealing with. Like when you gave me the different situation, the guy who wanted to use the arbitrage and get into real estate and stuff like that, we're gonna go down a whole different level. We're gonna be talking about arbitrage with that graph a lot more for that client than for a client like the guy you were playing in the beginning. Does that make sense? Like we have to be talking to them about their problem. They don't care about all the cool things that infinite banking can do if that's not why they're there. If they're there just because like they heard about IULs, they heard it's a way to have more in their account for retirement, then that's what I'm keeping my focus on first and foremost. If they've lost money in the stock market and never want to play the game again, that's what we're keeping our focus on. If they want to do real estate arbitrage and use their money twice and get over on the banks, then that's what we're going to be talking about. All right. So, I mean, that's it in a nutshell. I mean, the most important part to me is the discovery call. If I get them committed on that discovery call, guys, like, I mean, I've had people who don't show up, Josh, you were saying like, if they don't show up for the appointment, I can't get them rebooked, then we're lost. Now, I'm not worried about that particular person. But for the ones that we had that strong open call, and as I said this last time, it was 8 out of 50, which I'll take for this clientele. I'll take 8 out of 50 all day long. And I'll be honest, guys. I have a very busy schedule. I'm not trying to just say that, but like I really do. And I put just the amount of time. Like I have about 10 hours a week that I can put towards working client stuff. I just don't have more time for that. So there's a lot of stuff that I know fell by the wayside because I just didn't have time. My assistant was working on other things. She didn't have time to get to it. I wish I would have known some of y'all were doing it. I would have sent them over to you and y'all could have probably worked and gotten something from them. So I know, I would say, Jack, if y'all could make bonus leads out of my lead, there's probably still some good stuff left in there. But like if you work these leads, if this is what you're doing, as full-time for you, if you're really pushing on the production side, I don't see why the 50 leads that come in through through this channel, there's not 15 or 20 of them that should turn into very solid appointments. Now the question becomes, do they actually have the money to do what they say they want to do? That's all I'm trying. That's the end game that I'm trying to get to in the appointment. Do you have the funds to actually put towards doing what you say? Like if they don't have that, I can't create the funds. And there's a lot of people that are going to see a lot of stuff online and think that they want to get it, but you know, they're living paycheck to paycheck, and that's just not going to happen. So I definitely do my due diligence, you know, whenever I'm qualifying them, before we go into actually writing an application, to make sure. That's when I think maybe it was you, JB, you asked the question as far as like, do I get into what their income and expenses and stuff like that is, right? And I do that after the presentation, after I go through the presentation stage, and I'm getting into that commitment. Now I'm going to do a little bit of qualifying, right? And I'm going to make sure that, you know, if they've already told me they got 250 that they're saving, then we've already done some qualifying. But if I haven't really gotten a number other than them saying, I would like to put in $300 a month. Okay, so now tell me, where's that $300 a month that you're wanting to put into this going to be coming from? You know, what is your current income looking like on a month-to-month basis? Oh, I make $22,000. Oh, okay. All right. Spouse? Oh yeah, she makes $97,000. Oh, okay, all right. You can keep going. Right. He's just making $22,000 and he's by himself. I'd be like, yeah, you need to keep on looking, keep on working on it, and we'll get there for you. Right. So this is just, I wanted to give you guys this flow. I think the biggest thing that I can say to take away from whether it's the discovery call or the appointment is you want to go through those phases of connecting with them, digging into the situation, pulling out that problem, making it very real, going into your solution phase where you're being able to give them, here's the solution, here's what we can potentially do for you. And then I'm going to go into the consequences, like what's going to happen if you stay doing what you you're doing right now. I'm going to transition from that into where I'm actually presenting, just using a simple chart typically. And then from there, we're getting the commitment. We're locking that thing down. We're locking down how much they're going to put towards it. And a lot of times, guys, I'm not getting to an illustration for them until we're at the commitment point. That's where I'm getting into the illustration. Go ahead, JB.
I was trying to write down that you connect, dig in. Can you just say those so I can list like what we're gonna do? First, you connect with them, then you kind of dig in. If you could give those steps, that would be great.
Yes, ma'am. So connection first. Connection. Get into their situation, their actual situation. What's going on for them right now? What are they doing? How are they saving? Not how they want to. This isn't a want to situation. This is their current situation. Okay. Then I'm going to get into the problem. So what's the problem with this situation? Why isn't this working for you? Why are you filling out forms, asking people to call you about IULs? That's not what normal people do. All right. So what's the problem here? What can we help you solve? Then I'm going to talk about the solution. I'm going to give them some ideas about here's a potential solution. Here's how IULs can answer the questions that they have. Right. I'm not going to talk about IULs can do a lot. And this is where, Tim, to your point, I see a lot of people making this overly complicated because they're trying to explain everything that an IUL can do. They did not send that form in to understand everything about what an IUL could do. They sent the form in to solve the problem that they think IULs can solve for them. And that's all I'm talking about, period. When I start going down the road towards all these other things, now we have to have 4, 5, 6, 8 appointments, and you know, we're done. Okay. So talk about the solution, right? From the solution, I'm going to go into what are the consequences. So this is kind of backtracking. This is the takeaway in our symmetry parlance. So we're going to take it away from them, right? Well, you know, Tim, what if you just keep doing what you're doing? I mean, like it's working so far. You know, well, why rock the boat? Why do we gotta keep having this kind of like you can go it? You know, like I'm really trying to let them off the hook. I want them to convince me. Like this is about them persuading me that I need to help them to get what they want. This is how I don't sell. I help someone buy something. right? So what are the consequences if we stay and just keep doing what you're doing? You know, what does it gotta look like at age 65? You know, are you gonna be happy? Are you comfortable? And I'm listening to like what are the emotional things that triggers to them to stay in the current situation that they're in. Now after that, we're gonna do some of that light qualifying, like, okay, now you said 250 that's what you're saving right now. So if we could use that to help fund this, or if maybe they didn't say they're saving 250, it's like, okay, we're thinking you want to invest $300 a month into this. You know, where's that gonna come from? You know, how's your income looking right now? How are expenses looking like right now? Where are we going to get that investment from? Now, based on what you told me, this is our transition to our presentation. Based on what you told me, what we're looking at right here with an IUL would actually work for you. And let me show you exactly how that works. And I'm going to go over to that graph. Like you've probably already seen this, right? You watched the 20-minute video. But I want to explain this key part, because if you understand this, you understand how this gives you access to money now, how it protects your money from downside risk, and how you're going to get continual growth in your policy year over year. Okay? We go through that. They're like, yep, this makes sense. This is what I need to do. And now we go into that commitment stage. All right, Tim, now you let me know. Has this answered all the points that we needed to answer so that you don't end up continuing to live in fear, worried about what your retirement is going to look like, and fearful of the next crash? Does this answer for that for you? And could this possibly be a time to make a switch?
Well, I'm going to say yes, but you also get people out there, yeah, you know, I'm going to run this by my financial advisor, right? Or, oh, I need to get my wife involved.
If I've gotten to this point now, number one,
you would have had a wife on the call.
Yeah, if it's a husband and wife, yeah, I'm sorry, that goes without saying. If it's a husband and wife, I'm gonna have both of them on call. All right. And if they do have a financial advisor, my simple response to that, Tim, you mentioned earlier you didn't like all those fees. Like even when your financial advisor loses you money, do you still pay him fees?
So the reason I brought all that up is at any point early in the conversation, as if we would ask about the wife being the chief financial officer, is there anybody else we should have involved in this conversation? An accountant, financial advisor?
No.
I don't ask that question. Do you ask that question?
I don't ask that question. Number one is because I'm gonna have those things, like especially if they bring up, if I need to bring up fees, I'll bring that up, right? Like I'm painting this as a picture that what do you want to do, right? Now, spouses, I definitely want the spouse on the call. That goes without saying. If it's a husband and wife, husband, wife, like they're going to be on the calls together. All right. But then when it comes to those others, like if we get to that point, like if you set this thing up right, by the time they're saying, yeah, Edward, like we got to do something different. We can't have that be the consequence of what we're doing right now, because we're talking about what they're doing right now. Right now, they have the financial advisor, right? I've yet to have, and I'm not saying it won't, I've yet to have someone, if we get all the way to that point, now I've had them bring up the financial advisor earlier, Tim, right? It's like, yeah, you know, when we're talking about the solution, right? Before we get to consequences, when we're talking about the solution, that's what, well, I hear what you're saying, but I really need to get my financial advisor to take a look at this. Like, oh, okay. So this is that, and that's what my go-to is. This is that financial advisor that you're paying fees to, even when he loses you money. Do you think he or she wants to keep getting paid those fees? Whether he's doing it, like if I'm doing a bad job, guess what? You don't got to pay me. It's gonna be okay.
I love when my financial planner that I used to have said that things were flat. Like we made 10% 2 years ago, but we lost 10%, so we're flat. Do the math.
Yeah.
Lose some bucks. Like
yeah,
that's not
exactly.
Flat.
And so that's going to usually come up if that's someone that they want to have a conversation with. That's going to usually come up a lot earlier. By the time we get to them saying, yeah, that's why, and I hope you heard how I said it. Like whenever I'm going to the commitment phase, I'm going to be like, so Tim, do you think, or let me say it this way, like, does it feel like now is the time to possibly make a change? And kind of leave them with, like, I want to slow it down. I want to allow them time to think about it. I want to give them that out of possibly, because guess what? They could come back and say, no, this ain't the time that could change. But if I put it that way, typically it's going to be, yeah, no, this, okay, great. Well, like I said, I worked up some illustrations just for you based off what you told me. And we can modify and adjust these as you see fit. But this will help us get what you're saying you want to do. This is going to move us out of those situations that you're currently in and into a place where you can take advantage of that green line that we just took at. All right. So being slow, being diligent with how I'm talking, and like I said, I was a little bit fast when we were going through the opening. I knew this would be probably about an hour and a half. I told Arturo, like, it's to go through all this on a training side, but like when you're actually doing it, it doesn't really take that much time. I mean, that discovery call might be 15 minutes if it's a long one. Okay, the actual appointment, I don't really have any appointments that run longer than an hour. And usually by the second appointment, like if we don't close and do an application on the first appointment, by the second appointment, we're going into where we're filling out an application. After every time I talk with them, they get some form of homework, right? And I don't want to talk with them any longer than 72 hours after a previous conversation. But what you'll find with most of these, especially when you're under that $1,000 in monthly premium mark, is that these are going to be some pretty good, one discovery call, one sit appointment. If they already have in their mind that they're going to be putting $250, $350, $500 into this, then we don't really have a question about the money as long as we know where the money is coming from. All right.
Very quick. Do you do the calls over Zoom or on the phone? The discovery calls.
Discovery calls over the phone. I mean, because it's a lead. Like I don't have a way to do a Zoom with someone who I don't have an appointment with. So discovery call is all over the telephone. That's what I'm trying to show. Like if I have my earbuds in, I'm still, talking and doing my hand gestures because it helps to influence my tonality. Right. And I saw someone in the chat mention Jeremy Minor. Love Jeremy Minor. Love his, like what he teaches and how he talks about it. And yes,
that's exactly what you just did.
What's that?
Exactly. That's exactly what you just did. You were sort of confused and you would describe.
But I mean, there's so many great folks out there.
Listen to this in the background.
Yeah, exactly. So I mean, but that's where a lot of the way I do my selling now comes from. I continue to work on mastering that. I'm not a master at all yet, just working to get better at it. But if we're doing that, then usually this is typically a 1 or 2 appointment close, just depending on the amount of premium that we're talking about putting into it. And then always ask those questions. People who are looking at this, typically they do have 401ks, IRAs. I'm not trying to do all that right then. I want to get this close first. But I'm taking good, copious notes. And I promise you, 3 months from now, guess what I'm going to be talking to some of these people about? It's like, hey, remember that 401k you got sitting over there? Yeah. What's been happening with it? Oh yeah, really? Okay. Want to keep that going? And next thing you know, we have annuity stuff. So, all right.
So you do the phone for booking the appointments, even if you have them book on your calendar. You do a phone or not a Zoom
if they book on my calendar, it's still a discovery call, JB. Like
right, but it's still a phone or Zoom. You'd
still phone. First call is gonna be phone. Right. I need to make sure that like they have some real interest. I need to pique their interest as well. And then that sets up a solid Zoom appointment.
Got it. Thank you.
Yes, ma'am. All right. Any other questions? If not, I'll turn it back over to Jack.
Thank you so much. That was very good, very informative. We appreciate it. And thanks again.
Yes, ma'am.
All right, Ed.
All right, Jack. That's kind of it right there. I mean, we like I said, when it comes to trading like this, you can dig and dig and dig, and like we can go a whole bunch of different ways. But at the end of the day, it's just a matter of one, just being willing to connect with those clients and really highlight what's going on, show them simply what your solution is, and give them a reason that they need to persuade themselves that it's time to buy what you have available for them. So I hope that helps those who are looking to work this particular lead type, but this market in general, because it's such a great market and such a great product.
Perfect. Yeah. From Jerry and Tim, man, just keeping it simple, right? Finding that one pain point, and man, you took that knife and you just twisted it multiple times. Instead of just working out every scenario, what this happens with some people. No, it's that specific scenario. Just think about it in terms of Arturo, right? What do life insurance agent want? They want better leads.
Yeah.
Well, what do we give them? Better leads. We don't need to tell them how the ads manager works, all that. I mean, we could, but what do you want? I want booked appointments on my calendar, right? That's what we give them, right? It's the same with your IUL clients, right? Give them what they ask for. Easy. Octavia, I'll let you. You had a question.
Yeah, I'm sorry. I know I
No,
was
you're
waiting
good.
on a question, but real quick, just wanted to know, what you like about NLG, because I haven't written with them, but I am contracted with them. I usually use F&G or either Mutual Omaha or Forrester, so just kind of want to see what you think.
What I like about them is my first IUL was with them. Like, let's be honest. Like, I mean, the difference between most of these carriers is very slim. An illustration is just an illustration. That's not the guaranteed returns that's going to be happening. It's based off what happened for their particular product over the last 20 years and how much they're willing to illustrate. National Life Group typically illustrates lower than F&G, but performance-wise, I have an F&G policy and I have a National Life Group policy. I got my NLG policy back in 2013. I got my F&G policy back in 2017, and the performance has been commensurate amongst both of them, right? So that's why I say that. I don't mention them. I know Foresters has a great IUL policy. I have a participating whole life policy with Foresters, right? So I'm really one that I know most of these carriers. If you're dealing with the top tier of carriers that are out there, the performance metrics are going to be very similar across the board. So if you find a carrier that you like their customer service, they answer your calls, they make it simple for you to work with, the application is simple for you, then I would keep it to those carriers.
Yeah,
Yeah, all my children had
almost
F&G.
2 points less than F&G. It's crazy.
Yeah, it does illustrate lower, but at the same time, what your clients are looking for, what the returns are going to be. And that's where, for me, on National Life Group, if I go that route, typically I go F&G. That's what I typically do. But if for whatever reason, if there's a health reason, and National Life Group does get more people through for some of the shakier health stuff, then I see with F&G. But it gives me an ability to use multiple different carriers.
Thanks for that.
I find you could do more with the F&G illustration. You can really squeeze the money. The numbers can be manipulated easier within an F&G illustration than it can with an NLG.
Yeah, and I try to keep my illustrations very simple too. Typically, just real quick on the illustrations, I usually show them stopping premium at 65 or 67, depending on the age of the client. Like if they're older, I'm gonna stop it at 65. If they're younger, I'm gonna stop it at 67 or 70. Right, so I can show them in the illustration. Here's where you can start taking out that lifetime guaranteed income rider. Right, so I want them to be able to see that. So that's one of the biggest things. I keep it. I typically go option A, so level death benefit for the majority. That's going to help maximize the growth as opposed to the variable one. I see Tim saying no.
Run both, guys. I have some experience in this. Run level, run increasing. It's not cookie cutter. You'll be surprised.
Okay. And I mean, definitely when you're doing your illustration and your game planning ahead of time, I do run multiple different scenarios so that I can see, again, what's going to be in the best interest for the client. But I'm wanting to make sure that, I'm trying to minimum death benefit, max that I can put into it as long as it stays non-mech, right? And especially on F&G, they make it very simple to kind of toggle that switch so that's ready to go for that.
Well, if they're a really wealthy client, sometimes they don't care about whether it's a mech or not.
True, but I can almost guarantee that these leads will not bring you those clients. That's not who's filling these out. When you run into those, you have another thing. You got there's some additional trainings that you need to do for that.
So real quick too, just so we can add this, because I see this happen a lot. Some agents are going to buy the 50 leads, They're gonna have a really good month, and then the week after they're gonna be like, "Oh man, I don't have the cash flow yet to buy another 50." IUL leads and IUL sales can take a couple weeks, to process. So don't get frustrated in the process. Just stick to the work and I know everybody loves selling IULs, right? Like just help the client out any way, shape, or form. You may have somebody that just had a stroke 2 years ago or cancer last year, whatever. Just help them out, man. It's not that serious. They have a problem. Figure out what the problem is. Bring up realistic expectations. Like I honestly, the discovery call, say, hey, because I'm like, man, you've been watching all this stuff. Yeah, TikTok's blowing up how easy this is, right? I'm like, look, there's just 3 things you got to know because everything sounds so great, right? 1, you got to be in pretty good health to qualify for these, right? 2, you got to have some discretionary income, and 3, you got to qualify, right? And you got to be really patient because this is not a get rich quick scheme.
Mm-hmm.
All right. So does all that sound good to you? Yeah. Okay, cool. Let's talk more because I hate when agents spent 2 hours with a discovery call and then go back to do the other call and then all of a sudden they find out, oh crap, this guy has a $300 budget. And out of that, left over after he's done paying all his bills, and now he can only do $50 or whatever,
Well, and that's why, Jerry, if you dig into what the situation is, you'll answer that question for yourself.
Yeah.
Like you'll find out that if you're actually digging into like what is your current situation? Because if they're like living paycheck to paycheck and not really doing anything, that's good. Oh, well, I just get by and make it. So why are you looking for this? Right? Like I'm gonna dig in and be very frank and very real with them.
Yeah.
I'm assuming that if they clicked on an IUL lead, they have some basic knowledge about it. I'm not here to educate you for the first time. If that's what you're here for, get back on TikTok and get back with me later on. And I'm okay with saying that because again, I'm not trying to convert 50 out of 50.
Perfect. All right. Well, hey, we'll go ahead in this one. Ed, thank you for your time. Like I said, valuable time. A couple things. This recording will be made available to everyone. The slide deck, we'll get with Arturo on that one. Maybe we can find like a blank one. And that's very, very simple. Share your screen, go on Zoom, share your sound, and hit record. That's all you got to do when you're recording your own slide deck. So we'll get with Arturo on that one. And then as far as the videos go, anyone's welcome to watch any of the videos. Go to Ads Library on Facebook, type Arturo J. Johnson. That's how you find all the ads. That's how everyone's ads. Misty's ads are on there. Ed Pritchett's vet video is on there. Jerry's video.
Where is it?
Arturo J. Johnson. That's all you have to type in the search bar and Ads Library. And there's like 15 videos that we all run. The most popular one is the one with Earl wearing all white. Top 4 reasons to get an IUL. It's very, very simple. And so, yeah, I want to thank Ed for his time here. I think that's all we have time for today. Like I said, this recording will be made available. And then that slide deck, I think, is the only thing that people were asking for. So I'll talk to Arturo about getting that.
Yep.
You can also make another video in front of that red Corvette.
Yeah, for sure. Well, he has one of inside his Corvette that he did now. So yeah.
Chuck, when are we gonna have the video available with inside that school? Not school.
And Kajabi, yeah, Kajabi, I believe. Okay, yeah. We'll send it out to everyone though. We'll email it to you probably.
Oh, that would be perfect.
Yeah.
And you'll find out, Ed, you'll find out if you can share your video and we can duplicate it.
Yes, ma'am.
Yeah, that's the slide deck where we were talking about for sure.
Oh, okay.
Perfect.
Thank you. I appreciate it, guys. Let's
Yep.
go help some families get some IULs in place.
That's right. Let's close some deals.
Go.